All right, welcome back to another episode of Asset Coach and Tax Strategist. And this episode is going to be a short one, but this is kind of a serious one. We've seen this a lot working with our members over at Terra Firma, and this is kind of a epidemic with small business owners, anyways. And so I'm coming to you as a friendly voice, representing all those that are doing your bookkeeping and accounting and tax. So one of the things we hear all the time, and why we're so heavy and focused on taxes and the economic termites and trying to help you resolve as a business owner all these issues that you have. And so one of them is the taxes. Now, here's an area that we see is significantly affecting this area and calculating this area, and this is commingling. What is commingling? Commingling is where you, as a business owner, are charging in your business account personal expenses. Now, I do know some bookkeepers, some accountants prefer you to do that, and they've been working with you for a period of time, and they've built this process, if you will, to make sure that they're able to account for it, and they just want your life to be easier. Enough. No more. No more. You need to take the responsibility and separate your personal and your business. You're making it harder for you from a documentation perspective. Yes, your accountant says they'll do that for you. But at the end of the day, what is most important is if you ever get into an audit and an auditor asks for bank statements and an auditor asks for your financial statement, an auditor asks for documentation, and you're showing activity that you're actually commingling personal and business. You're piercing your own corporate veil. You're piercing your own entity veil. You're telling the IRS, no, we're doing everything the same as if we never had an entity. When you set up an entity, what's an entity? LLC, S Corp, partnership, C Corp. Okay, when you set up these entities, you set it up to separate your personal and business liability. That's the first task, the first step of that. That's the legal step. That's the very first thing. Then the government, the IRS, gives you the benefit of tax savings, meaning deductions and tax planning and other strategies are available to you. But before you even get to the tax benefit, if you're piercing the legality, the border, the wall between your personal and your business liability, you're piercing that by commingling. No matter what your accountant says, you are the taxpayer, you are responsible. You have caused your business entity to now no longer be an entity, but a sole proprietorship. And the IRS has every authority as your business partner to say, you're doing this wrong. You're treating this as a personal sole proprietor hobby or business, and we're removing all of your tax benefits as a business entity because you're not treating it as that. We're going to charge you penalties and interest for the taxes not paid as a sole proprietor until they get paid back towards whatever time period they choose to do. This is severe, which is why I'm doing this. Bob, you're over exaggerating. You're this is not going to happen. Fine. Test it. Test it. See what happens. But if there are rules out there, for example, when we're on the freeway and it says to go 70 and we're going 85, or maybe we even slow down to 80 and we get pulled over and the police officer says, "Do you know why I pulled you over?" You're like, "No, I don't." He says, "Well, you were speeding." You're like, "Oh, I was going 80." He says, "Yeah, the speed limit's 70." "Oh, but everybody goes 80. Everybody goes 10 miles an hour over." "Oh, well, but the law is 70. Does the police officer have the authority and the right to penalize you and ticket you? Yes, because you were speeding. You were going above of what the law prescribed. Commingling is doing the same thing. Setting up an entity is a separation of your personal and now your business liability. And your financial steps each day that you transact financially needs to do the same thing. Stop it. Now, there's some things that you may accidentally, that's fine. But what's happening is that the majority of you are just pulling out that business card and tapping it. Pulling out that business card, tapping it. Well, my accountant said, no. You're the adult. It's your business. You're the taxpayer. You are responsible. Okay? Somebody has to tell you, and so I am doing so. You have to separate, period. The penalties are severe, and you do not want to test it. Okay? So just do it right now. Well, Bob, I've been doing this for years. Great. No, well, not great, but you know what I mean. Stop now. Well, because I've been doing this for years, I should just keep doing it. Won't it look bad? They won't know, but they will know that you're like, oh, crap. Now I have learned that I've been doing this wrong. I'm going to correct it. Wouldn't you only like, if you got audited, to only have to pay penalties for a year versus 4, 5, 3 years? Start today. So what I did was I put together a quick little presentation. Let me show you. I'm going to share my screen here. All right, it's a nice little presentation. I thought this is what we present to our members. And it's the no commingling, no more commingling, stop presentation. Okay. And here's the steps. Okay. The step to no more commingling. 1, have a business checking account. Have a business checking account in the name of the business. If you have multiple businesses that are transacting revenue and expenses, have a separate business account for each of them. If there's a separate entity name, have a separate business account. Ooh, that sounds like a lot. It is the right thing to do. It's the right thing to do. I have like 14 businesses. Having 14 business accounts is a pain in the you-know-what. Having 14 separate financial statements is a pain in the butt. But guess what? It's very easy to track because they're all separated. My accountants and bookkeepers know what's happening. If I need to lend money from one business to another to get them through the cash flow of that month or whatever, I can do that, and it shows a loan, it pays it back. It's very, very logical steps and transactions. It's trackable, but it's not my personal checking account. Okay? Have a business account for every single one of your businesses. Second, you can have a business credit card for that checking account. Okay? Well, Bob, I just use my personal credit card, and then I file a reimbursement. Do you? Or does your accountant just reimburse you? Do you send in an expense report? Do you have an itemized expense report with receipts, submitting it to the accountant for them to pay you back? Do you have a corporate minute? Do you have meeting notes that says in your business that you are allowed to submit and be reimbursed for personal expenses by the company? If you didn't, you're commingling. Well, that sounds silly. Is it silly? If your business entity, keep track with me. If your business entity is a separate liability risk structure to separate personal and business, how in the world is your business going to have a voice? Its voice are documentation, corporate minutes, meeting notes. These are documentations, these are authorizations that the business gives you, the owner, the right to make these decisions. You only need to do it once. ABC Inc. is giving Bob Wolf, the president of ABC Inc., the authorization and the right to submit expense reports and be reimbursed for any personal expenses he may incur in the activity of doing business. Done. If you're ever audited, here's our evidence and proof. This was dated back in XYZ, and this is the authorization. Here's my listed expense report, itemized with receipts. Why would you want to tempt the IRS to prove you wrong? Versus, doesn't it make sense to just prove them you're right in the first place by just doing it right, and then you don't ever have to worry about it? What do they say about lying? It's so much easier to tell the truth because then you don't have to remember what you said in a lie, right? So just do the right thing the first time. Then you don't have to worry about it. Not that you're purposely lying, but these are steps that I'm trying to help you understand. These are the realities of running a business. This is your proof of what you're trying to do as a business. So very simple. Okay, step number 3, determine the amount of your lifestyle expenses on a monthly basis. Meaning, what does it cost to live your personal lifestyle? What is that? 5 grand, 10 grand, 15 grand, 50 grand, whatever that is, then you need to determine a reasonable compensation, a W-2 compensation. What is a reasonable compensation? The IRS defines that as what you would pay somebody else to do that like task and duty. Well, Bob, I'm an LLC, or Bob, I'm a partnership. We don't need to do reasonable compensation. True. But if you have it, boy, it sure makes life a lot easier if you ever get audited, because a reasonable compensation report gives guidelines as to what's the minimum you have to pay yourself based on your business, based on IRS lines, based on court cases. A report lays out the legality and the finalization and the structure of this is what we've been trying to do. Think about this. If you have a separate business account, checking account, you have a separate credit card, you've been filing everything, you've separated that, you do expense reports, and then you've chosen to pay yourself or have a documentation to say what's the minimum you pay yourself, but I actually pay myself more, but this is the minimum I'm allowed to. These are all steps talking to your business partner, the IRS, of what you're doing to try to run this partnership in a very meaningful manner, trying to be honest, truthful, and right in the very beginning. You're trying. That's what any relationship wants the other partner to do. Try. Okay? So a reasonable compensation report lays out the minimum compensation that what you do in your tasks and your duties would look like. All right. Then establish a paycheck from the business to your personal account. So from the business checking to, so yes, you need to determine payroll, a check. Well, Bob, but I'm a partnership. I don't need to do payroll. That's right, you don't. Now, they do have something called partner guarantee, where the partners can get a guaranteed compensation. It's not W-2 wages, somewhat similar, right? But I'm an LLC. You're right. But what I'm trying to explain and tell you is that in this process of working and communicating with your business partner, the IRS, it's always better for you to take the road leading the right direction, that you're trying to do the right thing, than having to be defensive and trying to prove to them in an audit of what you were thinking and why you did things from 5-7 years ago. Good luck remembering that. Maybe you can, and that's impressive. I know I cannot. Okay? So rather than me trying to remember all this stuff, we just do it in the beginning. Simple. Done. All right. So the other thing is 6, establish distributions from the business to personal account. So if you decide your compensation, so Bob, my to live my lifestyle, that costs about 15 grand a month. Okay, great. The reasonable compensation report says all I have to do is pay myself 6,000. Okay, what we would probably recommend is pay yourself 10 grand. Okay, so it's above the documented minimum a reasonable compensation of 6. You're paying yourself 10. So you're telling your business partner, I know, business partner, IRS, you generate revenue through tax revenue. So I know and you know I can pay myself 6 grand based on this proof and evidence in my reasonable compensation report, but I have chosen as your business partner to actually pay myself 10 grand, $4,000 more, pay the W-2 taxes, so you, my business partner, gets compensated as well. Okay. And then the other 5 grand to live my lifestyle, because it may fluctuate up and down based on that month and certain things that occur. We'll do scheduled distributions from the business to the personal. Boom, done. Very structured. Expenses are 15 grand. Awesome. Great job. Here we go. I did my reasonable compensation. That's 6. I've chosen to do 10. So 10 of your 15, 10 of your 15 will be W-2 wages, and then the other 5 will be distributions. Yeah, but Bob, if you're tax planning and you're a strategic tax planner, why would you tell people to take higher W-2 where they're having to pay more payroll taxes than pay the minimum that's needed? Because remember, this is a relationship with the IRS, and it is a give and take. We're dancing, right? We're helping each other out. We're working with each other. And if you're the one that's always just walking the line barely, just doing just enough, think about your marriage. If you're doing just enough in your marriage or any relationship you have, how successful is that? You're just barely doing what needs to be done. You're gonna have some problems. Yeah, you're gonna have some problems. Not every day, not every week, but you're gonna have some problems. There are gonna be conversations that are gonna be had, and they're not gonna be happy conversations, and they're gonna be frustrating. Why? Just do what's right. Plus, here's the other thing. If you're working with a strategic tax planner and you're actually focusing on tax strategies and building your wealth and accumulating other assets, which the IRS gives you other tax benefits for, then you're going to want to have this prescribed process laid out. Because if you're saving taxes in other areas of your profit, your K1, then at least having a higher W-2 than what your minimum is required shows your partner, the IRS, that, hey, we know we're doing tax planning. We're actually reducing the tax revenue that you're earning, that we're allowed to do, by the way. And you allow us to do that, partner. So thank you so much for doing that. But because we know that, we're going to pay higher W-2 wages. So that way you get some of this profit as well through payroll, wages, and taxes. What a great compromise. That's you trying to be a good partner, okay? Rather than going down this road that you're always trying to take and walk the middle of the line because I don't like the IRS. Great. That's not, that is going to be your problem, and a bigger problem if you ever get audited, okay? Now, number 7. What's number 7? Stop using your business account for personal expenses. I've said this, but I just have to have this again. Stop using your personal expenses from your business account. No more. Stop. No more commingling. Okay? And those are the steps. Those are the steps to no more commingling. Those are the steps to compliance. Those are the steps to working well with your business partner, the IRS. Those are the steps to success. Those are the steps to thriving in your business in a financial way. These are the steps to help your bookkeeper and accountant and tax team to know the steps in the process to make their life easier at tax time. These are the steps that will reduce their potential mistakes. Because at the end of the day, don't you want to put them in a position of success so you are paying less taxes? But if you make it so difficult by commingling, there will be mistakes and you will be overpaying in taxes just because of that. Just doesn't make sense. Just do it the right way the first time. So, I don't know if you like this content or no. I think this is such valuable information, and there's not a lot of people talking about this. And I think it's just so important because I hear this so much. I hear this all the time, and it's just really important for you and I as small business owners. Small business owner, think about that. That's about a $50 million business in revenue or less. So the reality is that this is really for you that are doing 5 million in revenue or less. Okay, you're the ones that are really not just you're not following the prescribed. And at the end of the day, you're the one that has the most to lose, especially in an audit, because you're still involved in the business on a day-to-day basis. You don't have the time to go through an audit. You don't have the time for the frustrations. But Bob, it seems like a lot of work. Initially, it may because it's new. But just a little extra work in the beginning is going to make the ending so much better. But you don't have to believe me. Just keep doing what you're doing. That's perfectly fine. It's your business. You can make the decisions. That I just feel like this is my responsibility to share this. So if you feel like this is good content, this is good stuff, give me a good thumbs up, please. I appreciate it. And you're welcome to add some comments down below. If you're not a subscriber yet, hit the subscribe button. This is so important. This is just one example on every Thursday when we drop episodes of how we're trying to help you and trying to do things that are different. We're in the thick of things. We're working with members on a daily basis, and things that pop up that we see as experiences and things that we can do to help, we pass on to you, the viewer. So it's a bit different. You know, there's a lot of guys on YouTube that I watch that are awesome. Their content's phenomenal. But I think this is the area that you and I as Main Street business owners really need to think about and focus on. So my name's Robert Wolf. I'm an asset coach and tax strategist. I'm the CEO and founder of Terra Firma Business and Financial Consultants. And I appreciate you being here. I'm blessed to be here.